So household finance is an area in finance that specializes in understanding financial decisions that households make. It can be, for instance, borrowing or lending when it comes to mortgages, or how households manage their pension funds, or how they manage their direct investments in stocks and funds, for instance. I think that people are starting to do more research, which is good. I think that one advice that I have, which is something that we teach our students as soon as they come to class, that's the first thing we tell them about finance, is to diversify more, because we see, so we have access to data for Danish investors, and we see what Danish investors do. So diversify is the first thing we tell our finance students, and that's the first thing that I would tell households to do.
I think the key risk area to manage for private investors right now is essentially ensuring diversification. We have a few single companies, in particular in the US, that really takes up a huge amount of the global indices and thereby also unprecedented levels of market cap represented in just a handful of companies. So ensuring diversification, but secondly, I think really going back to your strategic asset allocation and making sure that you're not responding too heavily on the day-to-day news flow, that you keep your overall risk preferences in mind. And essentially not evaluate your portfolio performance on a too frequent basis. I think in the near term, it's all going to be US macro resilience, and particularly how labor markets will be faring over the next 6 months. Secondly, the policy response. In other words, how the Federal Reserve will respond to its dual mandate, employment and inflation. In the longer term, I think there are key risks in terms of financial market concentration risk, particularly centered around large cap US tech stocks, how they will unfold and how the competitive landscape will develop over the next few years. I am quite cautious about the political landscape. I think that we have seen a significant increase in polarization and detachment from typical economic alliances over the last 5 years.
I hope people see a little bit what drives retail investors and households into investing more responsibly. And I really hope that people understand that this shift towards ESG that has been mostly talked about from institutions, for instance, is also happening at the level of households. That households are not naive customers that are just investing randomly, but also driving this wave of change towards investments that are changing, that are making the world a better place from environmental and social aspects, for instance.